Have you ever clicked buy now and just paused for a second to think about what happens next? I mean, it feels totally instant, right? But behind that one little click, there's this hidden world of financial machinery and, let's be honest, fees. So today, we're going to pull back the curtain and break down exactly how these payment gateways make their money and, maybe more importantly, how much of your money they're really taking.
Seriously, think about it. You see a price, you punch in your card details, you hit that magic Pay Now button, and then what? The whole thing is so seamless, it's easy to forget that behind that one click is a multi-billion-dollar industry that's built on taking a tiny, tiny slice of every single sale. So where is that money actually going?
The best way to think about it is like this. Every single tech company that controls the checkout process basically becomes a toll collector. I mean, companies like Stripe, PayPal, Adyen, they have set themselves up as the ultimate gatekeepers for online commerce. And they've built this incredible business model just by collecting a small toll on every car or, every transaction that passes through their gate.
So what makes this position so darn powerful? It's actually pretty simple. When you type in your payment info, the gateway is the very first system to touch that super sensitive data. This gives them a massive amount of control over the whole transaction, right from the very beginning.
That single click you make, it kicks off this incredibly complex chain reaction. The gateway instantly encrypts your card details, which is, a huge security step. Then it turns them into a secure token, so your real card number is never floating around. And finally, it routes that token to all the right banks and card networks to get the thumbs up. They do all of this whole complicated dance, in milliseconds. It's the speed and security that modern e-commerce completely depends on.
Okay, so let's get to the good stuff. How does this powerful position turn into money? Well, it all starts with their main revenue stream, the transaction fee. This is the charge everyone sees. But believe me, what you see on the surface is not the full story. Not even close.
Ah, yes, this number. Most businesses know it by heart. 2.9%, plus 30 cents per transaction. It looks pretty straightforward, right? But here's the thing. That single fee is actually a whole bundle of different charges all rolled into one to keep things simple. And here's the real kicker. This is not all profit for the gateway.
So let's take a look at how that fee really gets sliced up. As you can see here, the biggest piece of the pie, we're talking like 75% of it, goes to the issuing bank. That's your customer's bank. It's called an interchange fee. Then a smaller slice goes to the card network, Visa or MasterCard, and another bit goes to the acquiring bank, which is the merchant's bank. And that last little teeny tiny slice, often just 5% of the total fee, that is what the gateway gets. It looks small, I know, but when you're processing billions and billions of dollars, those tiny slices add up to an absolute fortune.
But this is where the business model gets really, really clever, because those transaction fees, they're just the tip of the iceberg. The real genius is in all the other, often hidden ways that these gateways make money. I mean, just look at this whole menu of services. They can hit you with simple monthly fees just for having an account. They charge extra if you need them to handle a chargeback dispute. They sell all these premium software tools for things like subscription billing. And for their biggest customers, they just throw the standard pricing out the window and negotiate massive custom enterprise contracts.
Let's zoom in on one of my favorites, float. So when you get paid, the gateway holds on to your money for a day, maybe two, before it actually lands in your bank account. Well, during that little window, they can earn interest on that massive, collective pool of cash. We're talking about billions of dollars in transit at any given moment. So even a microscopic interest rate can generate millions of dollars in pure profit for the gateway. It's basically free money.
And here's another huge one, currency conversion. Anytime a customer in, say, Germany buys from a store in the US, the gateway handles that currency exchange. But they don't just use the standard rate. Nope, they take the rate and they add their own markup on top, usually 1 or 2%. For a business selling all over the world, that's like a 2% tax on every single international sale. And for the gateway, it's pretty much pure profit. It's one of their most lucrative services, for sure.
All right, so that's the playbook. Now let's see how the giants of the industry, we're talking Shopify, Stripe, and Adyen, actually use these strategies to compete with each other. Because, and this is important, they don't all play the game the same way.
This really breaks down their different philosophies. You've got Shopify, whose strategy is all about the platform. They bundle payments in so tightly, it's almost impossible not to use them. Then you have Stripe. They are laser-focused on developers, building this whole ecosystem of financial tools that they can then upsell to their customers.
And then there's Adyen, which kind of ignores the little guys completely to go after massive enterprise clients, operating on super thin margins but making up for it with insane volume.
And wow, this chart right here just perfectly shows Shopify's strategy at work. You'd think they make all their money from those monthly subscription fees, right? I mean, that's what they sell. But look at this. Their revenue from merchant solutions, which is mostly payment processing fees, absolutely dwarfs their subscription revenue. It's not even close. For Shopify, payments aren't just some feature, they are the business.
Okay, so we understand their model now. The big question is, how can you use this knowledge? If you're a business owner or a freelancer, what can you actually do to save some money on these fees that, let's face it, are pretty much unavoidable? Let's dive into some practical advice.
First things first, it's important to remember the value you're actually getting here. I know the fees can seem high, but you're not just paying to move money from A to B. You are literally renting access to a massive global financial network. The gateway's handling the security, they're taking on a lot of the fraud risk, and they're dealing with all the complicated compliance stuff so you don't have to. Trying to build that yourself would cost millions.
But you can still be smart about it and minimize those costs. The most obvious thing to do is compare rates. They are not all the same. Then think about how you're being charged. If you sell internationally, set up ways to accept local currencies to dodge those currency conversion markups. And invest in good fraud prevention tools. It's often way cheaper than paying a bunch of chargeback fees. For really big invoices, think about skipping the gateway entirely and using a simple bank transfer. And last but not least, remember this. If your sales volume gets big enough, don't be afraid to get on the phone and negotiate a better rate. They want to keep your business.
So here's the main takeaway from all this. Payment gateways have built this absolutely brilliant business model where they make money every single time you make money. Their success is literally tied to your success. By understanding how they charge, not just the headline number, but all the hidden stuff, you give yourself the power to choose the right partner for your business and keep more of your own money.
And that really brings us to our final question for you. Now that you see the whole picture, the bundled fees, the float, the currency markups, all of it, take a good, hard look at your own business. How could you reevaluate your payment setup to maybe cut those costs? It's not just about saving a few pennies here and there. It's about understanding the system you're part of. Thanks so much for joining us for this explainer.